Hey everybody, I'm at Regal Cinema today in El Cajon, and this is a theater that was supposed to have closed down back, I believe it was January or February, but the company, Regal, they're trying to negotiate their lease with the landlord, and the reason they have a little bit of leverage is because this is such a big complex. It's 2 levels, you can see back there, we're on the upper level right now. So the landlord is not going to be able to rent the space out to too many people. So hopefully they'll get a good deal on their lease and they'll stay open. I don't really go to the movies that much. Today I'm having a daddy-daughter day. So we're out here, we're watching a movie called Elemental. So we're having a fun time, so I'm not sure how many of you still go to the movies. The large popcorn was $10, drinks were $4, and they've really eliminated their staff. They didn't have an actual ticket taker in the booth. We had to just go through our touchscreen kiosk to get our ticket. And if you can see right behind me, they're really cutting out their staff. Look at this food court back here. All empty. They have just a couple people down on the first level and nobody up here on this level. So they cut out the ticket guy, they cut out a lot of the workers in the food area. And another thing, in our theater where the movie's playing, there's less than 10 people. Less than 10 people. The Haunted Mansion. There's my daughter. She's here. She's acting crazy. She had too much sugar.
How'd you leave me? You scared me.
I didn't leave you. I could see you. I was just walking down here. Yes. So I really do not think that movie theater is going to be in business much longer. We'll have to see how the lease negotiation goes. So if you're the owner of the building, would you rather have a vacant building versus just maybe lowering your lease price? Well, the problem is a lot of these commercial real estate owners have loans, right? We all know about the commercial real estate bubble, and now we've got cities, many cities across the U.S. with about half or more, in some cases, of their commercial buildings vacant. I just read that Denver has about a 50% vacancy rate. It's that bad and worse in New York and San Francisco. So some of the bigger cities are going to be really crumbling and decaying. Like a few videos ago we talked about how San Francisco might be the new Detroit if things continue the way they are. All right, but we've got some other news to get into today. The economic collapse continues. Now some people still question me, where's the economic collapse? There's people spending money everywhere. Well, think about this. If it weren't for the availability of credit, you'd have most people starve. Most people wouldn't even make it if it weren't for credit. So basically banks have become so essential now for survival for so many people. And I know that sounds crazy, but ask yourself, if you couldn't use your credit card, what could you buy, right? 7 out of 10 people, that would be probably even, I say most people, so it's even worse. Most means more than 50%. We're talking close to 70%. It's a pretty sad situation. So hopefully we'll get to a point where we won't be so reliant on debt, and therefore the banks won't have so much control over everyone's lives. Oh, and by the way, the movies, I did not buy the $10 popcorn. I did not buy any drinks. Actually, we brought in snacks, right? So not that $10 is going to break me. I just, I just don't like spending money on stuff like that. The popcorn's not even healthy. They put this fake butter on it. Anyways, long story, different story. Let's get into some other financial news here. Here's an interesting set of statistics here on the economy. Mortgage demand is down 35% just in the past 2.5 years. Refi demand is down 90% with the higher mortgage rates. Mortgage rates are up over 100%. That's more than double. It's about 128%. The Renter's Misery Index, I had never heard of this. The Renter's Misery Index is 11.75% versus 6.78% just over 3 years ago, the beginning of 2020. What is the Renter's Misery Index? Which is basically like the CPI for renters, the owner's equivalent rent. It is very, very difficult right now for a lot of people that are renting and the housing market is still way overpriced, overvalued, so it makes more people have to rent. Therefore, one affects the other. If you see a drop in rent or home prices, that's going to affect the other one, because the less demand here, then the less people are forced to go to the other one, right? Owner versus renting. So it's a mess right now because rents are too expensive, home prices are too expensive. More data here. This is since September of last year. Bitcoin's up 61%, gold up 18%, the U.S. dollar down 10%. So things moving in some interesting directions. People don't think cryptos are going to take off again until rate cuts are implemented, but we're seeing some movement, but there could also be some more big movements to the downside as well. So I'm not adding to any of my positions right now for that type of thing. The price of diamonds have fallen. The price of diamonds has fallen 18% from their peak. 18%. Another thing that I think is drastically overpriced. I was talking to somebody maybe a year or two ago, and they talked about how valuable their diamond was and how they were afraid to wear it. So what they did is she went out and got a fake ring, cubic zirconia, and it looked pretty close to this real diamond. And she said, "Oh, I keep the diamond in the safe. I don't wear it. I wear this fake one, which looks almost as good. You can't hardly tell the difference." So I'm thinking, okay, if you can't tell the difference, what's the point of having a real diamond? And if nobody's going to see it, if it's in the safe because you're afraid to wear it because you might lose it or get it stolen, what's the point of having it, right? I could see investing. Maybe you think the price is going to go up, right? I'd rather have a bunch of silver stacked in a safe than a diamond ring. But hey, to each his own. Maybe that's their investment, or maybe people just feel they feel successful by having a big diamond ring, even though they're afraid to wear it and stuck in a safe. Nobody will ever see it. Anyways, next thing here, next news item: Financial Times. FTC alleges that Amazon tricked and trapped. These are the words here. Tricked and trapped customers with Prime subscriptions. I've got a personal story about that. So basically what they're saying here, though, is that people were duped into signing up or enrolling for temporary trial on this Amazon Prime. And it wasn't easy to cancel it, so they couldn't cancel it online. You had to call a number. That's what's being alleged here. I was able to cancel it, I think, a few years ago. I went online and canceled mine, and I think I restarted since then. But yeah, they do that. And also, if you have a kid in your house, be careful, because the kid could sign up for something on some sort of tablet or Kindle or something like that, and it's very hard to put in parental controls on these devices, these electronic devices. So I have a kid that signed up for this expanded music service like a couple times now, and I don't know how he did it. So somehow he wanted to play a song, and it said, "Oh, you got to pay. There's a paywall because this is a upgraded platform to play this particular song," which he doesn't need to do, because you can basically get any song you want on YouTube. Any song you want. The day it comes out, it'll be on YouTube, I guarantee. An old obscure song from the 80s, 70s, 60s, probably on YouTube. If it was ever on a CD at one point or an album, it's on YouTube. That's what I found. Even very obscure stuff. So yeah. So Amazon, out of Financial Times, they're saying they tricked and trapped customers. What do you think about that? That's pretty serious. So they're gonna have to pay a big penalty. The U.S. Trade Commission's coming down on Amazon for this. So they're saying they need to make it easier to cancel the Prime, which I think Prime is pretty cool. I mean, you get the movie streaming, you get the packages delivered the next day. I actually bought an MP3 player for my wife because she doesn't like to stream everything. She likes to actually have the MP3s on the device without having to have an internet connection. And got her one and ordered it like 9 a.m. It was here that day. I got it at like 7 p.m. that night. Couldn't believe it. Pretty amazing what they do with these delivery times. Warehouses all over the place, so when you order something, it's likely going to be in your vicinity. Here's a number here. $572 billion added to the U.S. debt in 2 weeks. So wow, that's amazing, right? $500 billion in 2 weeks. Now, some people say it's scary. It's to a point now where the debt's so high that it doesn't matter. Are you any more worried now with the debt at $32 trillion than you would be at $40 trillion? Does $40 trillion scare you more than $32 trillion? And then if it goes to 45 trillion, well, then you'll be scared then. So the higher it gets, 50 trillion, oh no. I don't think anybody really cares anymore. It's unpayable. It's so big, it boggles the mind that even 100 trillion, I mean, what's the point? And what's the rationale behind being concerned about it anymore, right? After all, it is just digits on a screen. They click the mouse to put them there. They can click the erase button and delete it. That's the way I look at it. Are they going to do that? Of course not. Because the U.S., we're basically a debtor nation. We don't even print our own money. Long story. Most of you know it. I've said it here before. Ford preparing for more layoffs. The latest round of job cuts. It's interesting because vehicle prices are still very, very high. It seems like these companies would want to put out as many vehicles as possible. But we're still seeing layoffs coming out of different automobile companies. Very interesting. Also, Teslas are either at or the lowest they've ever been as far as the costs. So that's pretty interesting because non-electrical vehicles, they haven't come even close to correcting back where they were before the 2020 health crisis broke loose. So we'll have to keep an eye on that. More layoffs. Maybe it's AI taking over some of these jobs. It's pretty interesting there. The FDIC backstopped companies with enormous what I called bailouts. Even the day that happened, the day of the bank failure, we're talking about Silicon Valley Bank. We talked about it. I called it, in that video, I called it a corporate bailout. That's what it was. Billionaires were bailed out. People like Mark Cuban. Companies, corporations were bailed out. But if you stop making payments on your house, are you going to be bailed out? Maybe they'll give you a delay or a refinancing like we did in 2020 to 7.5 million homeowners. We gave them a mortgage forbearance, but they didn't just give billions of dollars, right, to all these homeowners. But the corporations that had more than 250,000, which was supposed to have been the limit, they got big rescue packages here. When the FDIC moved to guarantee accounts above 250,000, the federal deposit insurance threshold back in March, it also covered $1 billion of uninsured deposits held by a company called Sequoia, and more than 900 million, which is almost $1 billion, for the company called Conzoon Limited, right? Huge bailouts, folks, for companies, corporations. The argument was, you can't let this happen. It'll be the beginning of a systemic failure and domino effect in the bank collapses. That was their rationale behind it. We heard Janet Yellen talk about that. Also, the other argument that I've heard talked about with failed companies in general is, there's going to be job losses. There's going to be job losses. Well, maybe people can go out and get a job that is not dependent on a company getting bailed out, right? So my point is, let failed companies fail, and then maybe new companies can pop up to replace them that are actually ran well and not silly, keeping all this money in a failed bank, which I think everybody should know that the banking system is insolvent because they're loaning out money they don't have, fake money. So that's why I always say here, folks, keep stacking. This fake money system is on its last days. They're going to try to bring in a completely digital system. It's going to be slave coin, in my opinion, and that's going to be met with some heavy resistance. And it's going to get interesting. It's going to get wild and even dangerous here, in my opinion. Here, any day it could bust loose. You could wake up and these banks, they might have just let them fail because they're all insolvent, in my opinion. Or it could be a slow grind and we continue to see things get worse. Homelessness. I just went to the airport and picked up a relative who's in town right now, actually visiting, and a bunch of new homeless tents over by the airport here in San Diego that I did not see when I was there maybe a year and a half ago, maybe 2 years ago. So it's expanding. The homelessness problem is expanding. Debt is expanding. People are getting deeper into debt. More people getting deeper in debt than are paying off their debt or paying down their debt. In fact, you look at that number we talked about earlier, it's close to 70% people getting deeper in debt. Is there no end? Will the credit card issuers just come out at some point to say, you don't have to pay it back, it's fine? Or is there an end game with all this debt that people are accumulating? You let me know. And how are you stacking? I'd like to hear from you down in comments. Also, thank you to the following people for supporting this channel with your kind tips, donations, coffee money, whatever you want to call it. Super thanks button down there. Thank you to Robert Takata, thank you very much. Awesome tip, thank you. Pax OR32, back again, Pax, thank you very much. Silver Dragon, the trader, doing some good trades. Good job there. We'll look for other stocks that have a big sell-off, and I'll let you know when I'm bottom fishing these stocks. Pax OR32 again. DJ Jojo back for another bound of rock and roll. All right, people. Thanks everybody for being here. Keep stacking. Big love. Bye for now. Peace.